Lorraine, you're back in the room. Thanks for coming back in.
Thanks for having me.
What have you been up to since I last saw you?
Well, busy, always working.
I was going to ask you a question because I think there's been some changes. You know the pickup trucks,
Yes.
trucks. Sorry, what are they called?
Double cab pickups.
So what's happened? There's a tax change on those?
Yeah, so this is like your Ford Ranger, Nissan Navara, those sort of things. So before, if the payload was more than 1 tonne of those type of vehicles, then they would be treated as a van instead of a car for tax purposes. So that means that you could get full tax relief when you bought a double cab pickup, and also the taxable benefit would be treated as a van instead of cars. And as we spoke about before, the taxable benefit on cars is quite a bit higher than vans. So now from April 25 that has changed, so these pickup trucks are actually classed as cars for tax purposes, so for corporation tax purposes and for taxable benefit purposes.
So why do you think they've done that then?
I'm not sure.
Just too popular?
Yeah,
People using them as cars?
I think, that's it. It was a benefit for companies because they could have something that felt more like a car, but you still had the capability of transporting goods.
I think it's a bit unfair, to be honest.
Yeah, it does seem, and I can't imagine that the car industry is very happy about it either, because it was really attractive because of the tax breaks on it. So
and it did serve a purpose. I mean, they are okay. You can get some extra people in the back, but generally they are a van. They are a truck.
Yeah, exactly.
They were originally made for work.
Yeah, that's it.
They weren't made as a car for families. They were made for work. So it seems a bit unfair, but
There was talk about it. So I think about a year ago they tried to change the rules at that point, and but then within a few days they reversed that change. But now it's been brought in, so that change applies.
Okay, so I've got one.
Mm-hmm.
Everyone's got them, and now what's the obligation? What changes for them?
So there are transitional rules, because I think they appreciated that it is a bit unfair if you bought one last year and you thought that there were certain tax implications, then if to suddenly change the rules and cause a lot of extra tax without any notice is sort of a bit harsh. Now they've given transitional rules, so for I think it's 3 years, a 3-year period.
Okay.
Then
That's quite good then.
Yeah, exactly. Yeah. So you've got a bit of time to use the cab that you've bought.
But if you say 3 years, but you couldn't buy one now.
No, so if you buy one now, new rules apply. So it's only if you've had one
previous.
Exactly, yeah.
Okay. Well, you just have to be aware that they're changing things all the time.
Yeah, that's it. And I think that's why it's good. Speak to your accountant if you're thinking of buying anything like
just
significant.
See if there's anything in the pipeline.
Exactly, because you might think, these pickups, there are certain tax implications, but then if you haven't heard there's only been a change, then you could get caught out.
Yeah. Now, on another one, I just want to run over briefly. Mobile phones, they're massive now.
Yeah.
Everyone's got them,
Mm-hmm.
so they're all chargeable in the companies. Can you give your staff mobile phones?
Yeah, that's fine. So you could buy a mobile phone or enter a contract for your staff for them to use for business purposes. So as we spoke about before, if they're just making sure that any contracts or invoices are in the company name.
Yeah. Well, do you find that if a lot of these phones, when they leave the company, they take their phones?
Yeah, I mean, as we know with mobiles, they're pretty much worthless as soon as you start using them. So I think they appreciate that there's not really much value.
So are they written off almost like from the beginning? They're just out day one. I buy a phone in the tax year. That cost of the phone is written off.
Yeah,
It's not given a lifespan like.
No, exactly. I think we all know after a year or so, exactly, the software stops working and you have to replace it. So I think it's generally just written off.
Okay, good. I just wanted to run a few little things like that over you before we get onto the main topic. So where we left last time, we've done the directors and things like that. What would you like to really have a look at this time?
Yes, I think there are just a couple of tax planning points that everyone should bear in mind. If you're starting up in business, it's probably quite like your cash is all being put to good use, building the business. But if you do find that you've got any sort of surplus cash that you want to use to help with tax later on down the line, one thing that you can consider is maybe doing a company pension contribution. And so the benefit of that is, rather than you drawing money out of the company and being taxed on sort of drawing that money out and then putting it into a pension, the company makes the pension contribution for you directly to the pension provider. Is that
same for directors as the same as it is for employees?
Yeah, so you can, that we spoke about the auto-enrolment rules before, but if you wanted to increase that above the auto-enrolment thresholds, then you can.
Then you can do that. And then is the obligation different to the employee? If you want to up your contribution, does the employee have to up his contribution, or is it just the same?
No, so you can do it on a case-by-case basis. So if you wanted to, a director, if they wanted to make more of a pension contribution, the only thing to bear in mind is that there are certain limits of how much that can be contributed into a pension, and they do change, and they can be dependent on the amount of income that you earn, things like that. So I think it would be a good idea just to make sure that you speak to your accountant or your financial advisor before making any pension contribution, just to make sure that you're doing it the right amount and you're not putting too much into a pension.
Does the amount of staff you have make a difference to the contributions, or 1, 20? It doesn't matter?
No, it doesn't matter. Yeah.
So there's nothing there. Let's just go on another little thing that can be beneficial. We spoke about it a little bit before, but not in depth, is health cover.
Yes, yeah.
So when a company decides it wants to give its staff health cover, for whatever reason, whether to, bring in more staff, give people better incentives, or just generally give everyone a better sort of healthcare cover, what's the benefits really to doing that?
Yeah, so the benefit would be that the company can use it as a deduction to reduce its taxable profits, so it will help reduce its corporation tax. And the employee or the director, they pay just the tax element, so they will pay personal tax, but they'll pay tax at maybe 20% rather than having to pay the whole healthcare cost.
And would that be taken out of someone's monthly salary?
So there are a few ways of doing it. So at the moment there's the option to do what's called a P11D, so it gets reported on the P11D, the taxable benefit each year, and that gets submitted to HMRC, and then you can add that to your tax return at the end of the year. But there is also the option of what they say payrolling benefit. So each year a 12th of that goes on your monthly pay slip and you pay the tax as you go.
Yeah, because a lot of people wouldn't do, if you're on PAYE, you wouldn't do a self-assessment.
Exactly, yeah.
So so the company would submit what it's done in its yearly account, then that would be taken into consideration. So you would just basically see a small contribution come out of your salary every month.
Yeah.
So, and you feel there is a benefit there to everybody?
Yeah, I think particularly for the employee, they're just having to pay the tax element rather than the whole contribution.
And if you were offering that to your staff, you'd have to make them very aware that there is a tax element, because some people think it's a benefit, but they don't realise they're actually paying some tax on it.
Yeah, that's it. Yeah.
The same as company vehicles. If I had a company van, I'm taking it home, would I have to pay some personal tax on that?
So if it's a van, incidental private use, so taking it home, the commuting, very incidental private use isn't taxable. If you were using it as your main vehicle, so you were taking it to the shops and driving it on holiday, and there was significant private use, then that would count as a benefit. HMRC set the value of the benefit for vans, so that is the element that would be taxed. So each year that changes, and you'd be taxed accordingly.
Yeah, okay. We mentioned earlier, just while we were a bit off camera, about the benefits for child allowance and couples.
Yes.
Well, can you run us through a little bit what goes on there? So I think people are a bit not sure that even though they've got their own company, that they can still benefit from those sort of things.
Yeah, I think there's a couple of things to talk about for married couples. One of them would be that if your spouse earns less than the personal allowance and you're a basic rate taxpayer, then you can, or your spouse can, transfer some of their personal allowance to you. It's 10%. So currently that benefit would reduce your tax as a couple by £252. So they give up some of their unused personal allowance to you, and that reduces your tax bill.
Okay, that's interesting.
Yeah, so that's one of them.
Mm-hmm.
And then if you have children, then there are a couple of options for helping with childcare costs. One of them is what's called tax-free childcare. So for every £8 that you put into a childcare account, which has to be set up with HMRC, you put that in, and you put in £8, the government will contribute £2 towards it. So, and that's up to £2,000 a year that the government will contribute. So you build up, it's almost like a separate savings account that can then be used to pay childcare costs.
And that's for employees, everybody?
Yeah.
That's for everybody?
Yeah, that's available to everyone.
So how would that go? Because, I mean, someone's working for someone, they really wouldn't know how to do all that.
Mm-hmm.
Who would set that up for them?
Well, actually, the online guidance from HMRC, from the government, is quite user-friendly. And so if you searched for getting help with childcare, then it shows you the options that are available.
So you
and
think
setting
it is
up
quite
the account.
helpful then?
Yeah, I think so. And they do put the onus on the person, on the parents, to set up the account and to manage it. So it's definitely something to have a look at the guidance. If you've got an accountant, speak to your accountant. We can help you. But it's something that you would put money into and you would manage.
So the average person who's working, how would they be informed about all this? Because some people just wouldn't know about that.
Yeah, that's it. And I think that's why if the childcare providers might not mention it, so that would be somewhere that it may come from. Otherwise, it's things like this, just raising awareness that there's help out there.
Because that is quite a thing, isn't it, when people have children, they've got to make decisions to go back to work or have their children looked after. What's the benefit? What's the... When you're having a child and you're leaving, what's the requirement there? What's the obligation there as a company? They would have time off on full pay, or how does that work?
So there's statutory maternity pay, which we have to pay, and companies can reclaim that from HMRC to help cover that cost. If anything above that would be something that would be agreed in the employee contract, so you would have to go by what's been agreed in the employee contract in terms of any leave or maternity, paternity pay.
Okay, so basically there's a government statutory which everyone would get, and then there's other benefits that companies might give you outside of that.
Exactly.
And what's the obligation for them to hold your job open?
So that would come more under like employment law, and there's quite a lot of really good advice out there, particularly something like ACAS. They provide a lot of free advice, government backed, and so definitely have a look at that guidance to make sure that you're meeting your responsibilities as an employer. Yeah,
because if you're a small company and one of your girls are going to go off, she's going to have a baby, that's quite significant for a small company because they'd have to replace that person.
Yeah.
So they would only be able to replace that person with a short-term contract because the other person would have the opportunity to come back.
Yeah, that's it. Yeah,
that's how it works.
Exactly. So you're balancing your running the company with making sure that you're meeting all of your employer responsibilities.
Yeah, and then if they decided not to come back, they would have to give you notice? Or?
Yeah, that's it. And that would all be in their contract as something that you'd agree with them right from the start.
Yeah, so there's a lot of things to sort of know as an employer.
Yeah,
Because these things sort of just creep up on you and then you've got to deal with them.
Mm-hmm.
So is there anything you feel that that they should know outside of the general sort of day-to-day stuff of running a business?
Well, I'd say when you start your employer responsibilities, have a look at the online guidance that's available and just be aware of the things that may crop up. For example, even something as simple as just making sure that when somebody starts working with you, that you've got it documented and signed by you as the employer and the employee, the terms of their contract. So it doesn't have to necessarily be a really long employment contract if you're a relatively small company, but just make sure you've got the key bits of information, the salary, terms of notice, what happens for sick leave, that sort of thing, that is documented and that you both sign to show that you agree, you're both in agreement.
Because if you're self-employed and you're working with someone, you wouldn't get all those benefits.
No, that's it. So if you're classed as self-employed, then that you don't get any of the employee benefits such as sick pay.
How does that
things.
work for a company who's taking someone on self-employed, but they're working for them basically on a regular basis? Is that allowed?
So that's something that you have to be quite careful of, and make sure that you as a director or owner of a business are reviewing, and you should ideally be documenting the decision that you've made of whether somebody working for you is an employee or self-employed. And if HMRC were looking at it in the sort of the guidance that they give you, it's looking at things like who tells the person what to do, how much oversight do you have on the work that they do? Do they get to decide when they start, or do you expect them to be there at 9 till 5:30 Monday to Friday? Do you provide all of their equipment, any laptops or anything if they were working, or tools? Do you provide them a van? So if you're providing all of the equipment, if you're telling them when to work and what to do, and you are sort of responsible, and you've got that oversight of their work, it might be the case that it's more of an employee relationship rather than self-employed, and that determines how you should pay somebody, whether they need to be on the books as an employee or whether they are actually self-employed.
That's quite interesting, because I'd imagine that a lot of people are working self-employed for companies on a long-term basis.
Yeah, that's it. So it's something to be careful of, and making sure that you're monitoring it, and seeing that people who are self-employed are genuinely self-employed and would stay in that status.
Because the onus would fall on the company and the directors.
Yeah, exactly.
Is there a procedure how would they go about deterring that? Or if you ever had come across anything like that where people have said, no, these people are definitely employed, they're not working for you on a sort of a self-employed basis, and what would happen in that situation?
Yeah, well, HMRC could do a review of the company, so at any point they're at liberty to sort of open an inquiry, and it might be corporation tax, it might be VAT, it might be as an employer if you've got employees, and as part of that inquiry they can ask you lots of questions, and so at that point they may look at the invoices from your self-employed workers and start to ask more questions. That's it.
Well, what would highlight that? What would highlight, because obviously in your experience you've come across these, what would make HMRC suddenly say, we want to inspect your company? Is there anything that would flag up? What would be something?
I think it can be quite varied reason, and it can be really random. So sometimes they just might decide your company is the one that they're going to look into this year, and you might not have had any inquiries for years, and it just so happens that this year that you've just popped up on system. Sometimes if there's big changes in your expenses year to year, then that could flag something for HMRC. So if you suddenly had a lot of legal costs or repair bills, because there tend to be areas that
they're
people
looking for
may
things that are unusual, and then they trigger something.
Yeah.
So would that, if you had a personal inspection, so after that they've looked into your company, you want to do a personal inspection, there'd be a massive cost there, because you'd have to get someone to fight your case or look into it or do all the paperwork, because they could do you take out insurances or things against that?
Yeah, there can be insurances that you take out that are available, but I think it tends to be they don't tend to be too regular, so it might be the case that actually paying an accountant to assist you with an inquiry
is better
once every 5 years or 10 years or something. Then you might think, actually, I'll just pay those costs rather than take out the insurance.
So you don't really think you need to be too worried about that and taking out insurance? You feel like if you get any sort of like inquiry from HMRC, your accountant should be able to handle that for you.
Exactly, and especially if you've been working with your accountant throughout the year and preparing the accounts and the tax computation, you'd hope that there wouldn't be
something there that they can sort of like work on and work with you on.
Yeah, exactly.
Because obviously they're taking responsibility for doing your accounts, etc., etc.
Yeah, that's it. So the ultimate responsibility is always with the director, but if you have engaged with a professional to give their advice to make sure that you're claiming the right costs in your accounts, then any inquiry should hopefully be fairly straightforward in resolving.
Yeah, so a close relationship with your accountant should basically make sure that there's an easy running of any inquiries from HMRC.
Yeah, exactly. Give you some comfort. I mean, we just recently had a corporation tax inquiry. They asked for a breakdown of repairs and legals and copies of some of the bills. And once they saw everything, they were satisfied and sort of closed the review quite very quickly. So I think that's why it's important to get that professional advice.
Yeah. How do you find working with HMRC on things like this? You find them reasonable, fair?
Yeah, I mean, in that instance, it was all sort of very straightforward. Sometimes there can be delays in communications with HMRC because they are obviously very stretched. It's well publicised, that they've got a lot of work to do, and so it's just building in that time that some of the if there is something more complex, it can run on for years, sort of the backwards and forwards. So that in that case, it's not such a great experience.
Okay, this is the last section on the small business, how we're starting up. Is there anything you just want to briefly go over before we finish up on this one?
I think it's my overall sort of advice would be to speak to your accountant, even if it's not something that you're considering now. Just be aware of the sort of tax bits that we've spoken about.
Keep your books up to date.
Exactly.
That sort of thing. Any queries?
Yeah, that's
see
it.
Your accountant.
Yeah, and just if you've got your books up to date, then you can keep an eye on profits. You can make sure you're putting the money aside to cover tax bills, and so I think that's the overriding sort of general advice.
Thing of what we've been discussing. So that's great. Because on our next sessions, we're going to be doing a few more in depth.
Yeah,
we're going to be talking about other different subjects, but they're going to be more in depth. They're going to be so we're going to do that. Mm-hmm. So that's really good that we've managed to get through this and do this, and we've enjoyed it. Well, I've enjoyed it, so hopefully we've given some people some advice that they might take on board. Yeah. Just before we go, do you want to just run us through again your company and your details?
Yeah, so Clay Ratnage, we're based in Essex, the Essex area, Greater London, but we have clients all over the country, and we are general practice, so we can help very small self-employed people up to we do audits for very large companies. So we're happy to please get in touch, visit our website, and we'd be happy to help.
That's lovely. Thanks, Lorraine. So I'm looking forward to doing the next sessions with you, and hopefully we'll be a bit more in depth. And we are going to have a question and answers, which I did mention last time, but we didn't get through to it this time, but we will do it again. So people can put in some questions, we can give them some answers, and hopefully we can help these people move on with their businesses and give them some good practical advice.
Yeah, definitely.
Thanks for coming in, Lorraine. Look forward to seeing you on the next time.
Thanks very much.
Thanks very much.
Thanks.